Hey everyone, happy Gold Standard Suspension Day. It's the 54th anniversary of Nixon suspending the gold window. So here's actually what he said.
The strength of a nation's currency is based on the strength of that nation's economy. I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets. What does it mean for you? Let me lay to rest the bugaboo of what is called devaluation. Your dollar will be worth just as much tomorrow as it is today.
If you're a subscriber, if you watched any of my videos, and you probably know what happened on August 15th, 1971. So I want to take a little bit different route than most people, and I'm going to show you the purchasing power. I'm going to show you the purchasing power from 1792 to 2025, and you will see a major jump in 1971. So let's get to it. So you might hear some thunder in the background. There's a storm going on right now, but it shouldn't interfere with anything. So you've probably seen this chart before. This is the dollar adjusted for inflation from 1792 to 2025. And you can see there's a little peaks. You can see during the War of 1812, inflation spiked up and then dropped. And you can see during the Civil War, inflation peaked and then dropped. And those two gaps between the War of 1812 and the Civil War, there was little inflation, almost 40 years of almost no inflation. Excuse the dogs, they don't like storms. And you can see in the gap between the Civil War and the First World War, there was almost no inflation. There was very little inflation. And I'll get to a chart that I've kind of created, a list that I've kind of created to better illustrate this. And you can see from World War One, inflation kind of cooled. It did drop. It did drop in the 30s, but then it picked back up during World War II, and it never really dropped back down. And then right around 1971, it just skyrocketed, and it hasn't stopped. And it keeps increasing. So you can see that out of this entire chart, 1971 is the trigger date for all of this inflation. And I'll show you right now the list I have compiled of the value of $100 from 1792 to 2025. So here's the list of the purchasing power that I've compiled. So on the left, where it says $100 in 2025 is worth, that is $100 today. And how much money it would take and on the dates on the right to purchase that same item that cost $100. So just think of something that cost $100. Now, the prices on the right is how much money it would take back then to buy that same item that cost $100 today. So I thought this might be a better illustration, give you a better idea of how a dollar has changed and how it's changed over the years, compared to just saying a dollar in 1792 instead of saying a dollar today is $33 in 1772, because most people say, okay, well, yeah, I get it. It's a long time ago. But when you reverse it, you can actually see how much the dollar has lost, the purchasing power has lost. So this isn't necessarily tracking inflation. It's tracking all of the combined variables that cause the dollar to lose its purchasing power. So let's get to it. All right, so you can see what would buy $100 of goods today. You only needed $3.41 in 1794. So you can see that it was kind of rough during the first few years where they were trying to figure out the national banks, and there was booms and busts back then that were really like quickly or like shortly lived. So you can see the War of 1812, inflation kicked up a lot, and it was a war. I mean, it was a major war. So the purchasing power went from $3.41 in 1794, and you can see during and after the War of 1812, it picked up from $4.95 in 1813, $5.45 in 1814, and then it started dropping a little bit. And you can see it went back down to normal to about $3, roughly about 3 or below. And you can see it stayed that way until the Civil War. The Civil War, it picked up right around 1862. And you can see the Civil War just collapsed the dollar. You got to think about the purchasing power. People lost half of their purchasing power within just a couple of years. and they lost almost 75% of their purchasing power near the worst part of the Civil War. And this is why people didn't trust the greenback, which most people didn't know, but in 1879, all of the greenbacks were redeemable for gold. So the people that held on to those greenbacks, they had a hold on them for like 15 years, but the people that held on to them, they were glad they did. But that was the only time any kind of paper money has ever been like, I would say, upgraded. Because there were gold certificates, silver certificates, but no one ever thought that a paper dollar created during the Civil War to fund a war would ever become worth gold. It's just crazy to look at. So moving on. So you'll see after the Civil War, it calmed back down to about $3. And you can see even during the Panic of 1907, it only picked up a hair, just a little bit. And then you can see during the First World War, you can see it started picking up, and then by the end of World War One, you can see it picked up from up to $6.19 in 1920. A lot of countries were failing back then. Even Britain, they were never the same. So you can see from roughly about 1914 to 1920, they lost about half of their purchasing power in just those few years. And you can see after World War One, it never fully recovered. It never went back down to $3, but you can see it kind of floated around $4 or $5. And then, and you'll start to see where I started tracking the national debt. Before it was 10, 20 billion, nothing to really worry about. I started at 49 because it's close to 50. I know it's a dumb reason, but I decided to start tracking it there. So in 1942, you can see that the national debt doubled. And so it actually tripled from 1940 for the before the war, but I didn't put that on the list. So we'll just start at 49. 49 billion and 41, 72 billion and 42. And you can see where the United States entered World War II. You can see Bretton Woods signed on July 1st, 1944. And then you can see what happened in national debt after World War II and the Bretton Woods conference. And you can see that after World War II, you'll never see that $5 again. The last year that we're in the $5 was right after the war. So the purchasing power was lost. I have magazines from 1938 that show tractors like $600. And then I have ones from 1945, 46 where the tractors were like $1,800. The price of tractors tripled before and after the war. So you can see the first time the purchasing power hit $10, which is bad because you want this number to be low as possible. The higher the number on the right, that means the less purchasing power you have. Because now to purchase what cost $100 today, if it only took $2.57 in 1918, and it cost $10.77 in 1968. That means you've lost 75% of your purchasing power, and you're not getting it back. You could expect, and you could kind of brush stuff off during a war, and say, okay, it's going to be back, back to normal after war. But it never got better after World War II. So, and you can see the Coinage Act of 1965. That's where they took the silver out of the change. They kept 40% silver in the half dollars, but they took all the silver out, all the rest of the coins, and there weren't any silver dollars back then. So it was the dime and the quarters. So, and you can see the national debt hit $371 billion in 1970, and this is what we're talking about today. The gold window suspended. That was suspended in 1971. So look at the national debt. So well, if you see in 1970, the purchasing power of $100 was $12, and you can see it almost doubled. I'm sorry. It went up about $2 and just 2 years later. And you can see a kind of constant, almost $1.50 growth in those few years after that. So you can see after the gold window suspension in 1971, you can see 1973, the floating dollar exchange rate, you can see how it just jumped. Like I said, the number on the right, the higher it gets, the worse it gets. It's kind of like golf. Think about a golf score. You want it to be low as possible. And you can see that the national debt at the end of the Vietnam War was $533 billion. Okay, and the highest inflation rate period was in 1979, and you can see 1979 to 1981, and kind of in 1982 also. Those 4 years were the highest inflation periods in history, other than war. So you can see the annual interest rate was 13.5% in 1980, and the Fed rate was 20%. And the United States hit a $1 trillion national debt in 1981, and the purchasing power of $100 was $28. That was your purchasing power. So even then, since then we've lost another 75% of our purchasing power. And when you really look at it this way, it's just insane. So you can see we hit 2 trillion national debt in 1985. Then you had the 1987 market crash. You can see how the purchasing power dropped, and you can see the first time we hit 3 trillion, 4 trillion, 5 trillion. You can just see what it does to the purchasing power. You're just losing all your money by each trillion. And 2022, 2002. I'm sorry, 2002. You can see we hit 6 trillion, 04, 7 trillion, 06, 8 trillion, 9, 10, 11. You see, if you remember how when we go up here, we start around the 60s, 70s, we start seeing the purchasing power of $100 drop from 12 to 12 and a half to 13 to 14 to 15 to 16, 17, 18. You can kind of see that in the national debt, how the national debt starts to grow right after the 2008 financial crisis. You start picking up $1 trillion every year, and then some years even 1.5 trillion in 1 year. And then you can see in COVID. So in 2020, so look at 2019, the national debt was 22.7 trillion, and then in 2020 it was 26.9. Think about that. That's 4 trillion national debt added. And then you can see the years after. And the funny thing is, in 2022, you had the Inflation Reduction Act. Look what it did. It grew the national debt 10%. It grew the national debt almost as much as the VID did. Think about that. And you can see now all the way up to 2024. And 2025, you can see $100, blah, blah, blah. And we know that the national debt right now is 27.2 trillion at the moment and growing. But I mean, what do you think it's going to be next year? 40? Probably. It's probably going to be 40 trillion by next year. And by the end of Trump's term, it's probably going to be closer to 50. I wouldn't be surprised, but I would say probably around 42 to 44. That's my guess. But we'll have to see. So let me see if there's anything else I wanted to show you. But I think that's about it. And feel free to comment, because this is something that I spent 2 days compiling this list. And I kept going back through multiple sources and finding information. But I thought this is a really cool list, and I'll put this in the description. So happy Gold Standard Suspension Day, everybody. Thanks for watching. Like and subscribe.